going to be talking about self-employment. I didn't share this yet with you, so just as soon as we finish up, I'll share this presentation with you as well, so you guys can look at that if you want to. But we are going to be talking about self-employment. So if you ever watch The Simpsons, Homer Simpson really loves to be involved with any type of self-employment. So we'll start off with a little clip from him. Hopefully you'll be able to hear the sound, but this is all part of the test, so bear with me. Did you guys hear sound on that?
No.
No, all right, kids, we're going to test something else out. You guys are such good test subjects. You were just, could you read Homer's lips?
No.
That would have been even more impressive.
Please call 3634 Kirsty. 3634, please.
Okay, no sound on video, right?
Nope.
You cranked up your speaker, so I just scared the crap out of you, right? All right, so we'll remember that, no sound on video. That's good to know. I'll try to fix that later if I can, but there's some other ways. So,
I could hear it to an extent, Kelly. Like, I could hear the background of, I think it was Lisa's probably, because it was an intercom, and I could hear Homer like it was a whisper in the background.
Yeah,
Oh,
it was
really?
like really quiet.
Okay. All right, so I think I can mess with the volume a little bit and adjust that and get it to work. So we'll try that again here in a bit. But the most important thing is we are going to be talking about self-employment income today. And I say income, but we're going to talk about self-employment in general, but we're really going to focus on the income portion of that, and then we're going to throw in some other things with that. So self-employment cases are all different. So even though we're going to go over some really basics, every time you get a self-employment case, just know that there's going to be some new thing that you haven't seen before, or some new way that somebody's filing their tax return, or something is going to go on. You can always give me a call. I can help you through a self-employment case. If there's nobody else available, just let me know. We can work through it. But we're going to cover some really basics today. We're going to cover a little bit more tips on the self-employment interview and some things that you can do during your interviews to make self-employment just a little bit easier. We're also going to talk about types of self-employment structures. So this training will go into it really briefly. We'll talk about it just a little bit more as we go. We'll also talk about what type of verification that you need for self-employment income. We'll talk about annualizing versus averaging. So this is kind of one of those terms that gets thrown around, and you'll hear people ask whether they need to average or whether they need to annualize. We'll talk about what that means and when to do each. Also talk about self-employment deductions. Okay, so now I have a question. We're going to pause on this. So when Lisa just came up, did she come up on everybody's screen? She did. Okay. Yes, everybody just saw Lisa. Okay. So we are going, I'm just going to mute you, Lisa.
Okay.
No offense. So right now everybody saw Lisa just there for a second. Is that right? Ashley and Ashley, or no, or you're just seeing me? Okay, perfect. That's what I need to know. I just kind of need to know how this is working on the other end. I'm going to have somebody do this on the other end for me so I can see it, so that's perfect. Okay, so I'm not going to mute you. We'll just go ahead. All right, so can share this a little different. Perfect. All right, so on the self-employment interview, really it just covers the same basics that we talked about when we talked about interviewing skills, about asking appropriate questions. Remember, especially for self-employment or anything that you feel like you don't see that often, the self-employment interview toolkit or the interview toolkit itself can really help you walk through the questions that you need to ask. So I guarantee you're going to get very used to doing interviews about people's jobs, about their employment, about what's going on. Then when you get to your first self-employment case, sometimes it's hard to remember all the different questions that you need to ask. So that's a great time to just pull out the toolkit that you have, and whether you have that printed off or just on your computer, you can look through ahead of time and find out the most appropriate questions for your client so that you can ask them during the interview. Again, you don't have to necessarily use this toolkit as a script, which means if I was interviewing Ashley today, I wouldn't sit down and say, who in your household receives income from any source not listed in the application, and read it to them, because obviously that's going to sound a little bit clunky, and you're not going to have to ask every single question on here. But you will notice that it has several questions that you might not think to ask, and then follow-up questions if they answer yes or no or give more information on it. So use it as a guide. Don't necessarily use it as a script, but it can be extremely helpful, especially with self-employment. Along with that, as you're doing that interview, even if somebody doesn't declare on the application or just say, I'm self-employed, you also want to look for additional red flags that can indicate that your client's self-employed. So good red flags are a client being paid under the table, client being paid in cash only, or if you look at a paycheck and no taxes are taken out. Those are all three really good indicators that they are self-employed. So in an interview, you might hear things like, I just do what I can to get by. When you ask them how they pay their bills, usually that's a pretty good indicator that they're self-employed. Or I just do some work for so-and-so now and again, but they just pay me in cash. They are self-employed as well. So those are good indicators. So is everybody hearing a voiceover, or is...
I don't hear it.
Okay, so here's a question for you, Ashley. Do you have this open twice, like the broadcast and the Hangout? Sorry, you're muted. You have to unmute. You can't hear me at all? Okay, that does not help. Everybody else can hear me, right?
Yes.
Okay. Just kind of need to know how this is working on the other end.
I'm going to go to Ashley's office because all I keep hearing is Lisa popping up on your screens? Is Lisa popping up on your screens?
All right, so she's gone back in time. We'll wait for her to come into your office for just a second. I think I know what's going on, and this is great. So this is all part of the test. Okay, can you hear me now okay? Yes, and you're hearing me live, which is good. So we're going to stop. I'm going to tell you about it just a little bit. So the way this works is, for those of us right now, we're basically in the same Hangout or same call that we normally do, but it also is broadcasted out, but it's on a delay. So you were in the past about 30 to 45 seconds the whole time because you were just watching the video. And you're muted in that room, so I know you're talking to me, but I can't hear you.
I could hear you live too, and then I'd hear you for a little bit, and then it would go backtrack, and then all of a sudden it'd go, did everybody see Lisa? While you were still talking.
Yeah, because I think you had the broadcast open on your computer at the same time.
No, I had
Somewhere,
everything
like,
closed.
in your email. Oh, I don't know. Hopefully that's
It was
just an abnormality.
I don't know, but it's making me crazy.
Yeah. That's all right. I apologize. We're finding all these bugs out now, and hopefully we'll know what's going on when I start to do this. Okay, so I'm going to backtrack just a little bit because we talked about the self-employment toolkit or the interviewing toolkit and how it works with self-employment. I'm just going to plug that one more time, just in case you didn't hear that before, that it can be a very good help for you as you're going through your self-employment interviewing, especially the first few times where you interview a self-employed client. So go through, find the questions that are going to apply to your client. Also, the other thing we talked about is looking for red flags. So look for things like the things that are listed here. You're paid under the table, cash-only jobs, no taxes coming out of a paycheck, all of those red flags. So there's the recap. Now you're back with us 100%. So good. Okay, and then during the interview, you also want to clearly establish what kind of verification will be needed to determine eligibility. So these are things like if you look on that self-employment toolkit questionnaire or the interviewing toolkit questions on self-employment, you'll see things like, did you file a tax return for last year? Okay, if the answer is yes, and they state that the tax return is reflective of current business and there's no significant change, then we're going to request that tax return, and we want to make sure our client understands that that's what we're going to be asking to determine eligibility. So when they get the notice, all the notice needs to say is that you need verification of their self-employment income. And you don't have to specifically say, I need your 2014 tax return including your Schedule E, your Schedule SE, and any special schedules. It just becomes large and clunky that way, and if you'll talk about that with the interview, you're okay to send a simpler notice. So it just saves you time and saves you the stress and headache of trying to remember every single thing that you could possibly have to request, because there's several things that go on with that. That could include the other types of verifications that we might request, which could include like ledgers or books, but we'll talk about all that stuff. Okay, and then one of the most important things that I feel like it is good to know when you talk about self-employment is you need to be prepared to ask, to do a follow-up mini interview with your client after you receive the verifications. So once you get a tax return back, chances are you're going to have a few more questions on it. So you'll want to go back in, review that tax return or the ledgers or books, and then be able to call your client back and ask them questions. Okay, because there's always going to be things like deductions taken out that don't have full explanations, or charges that you can't quite explain, or income that you can't quite explain, and you're going to need to follow up with your clients. So especially with self-employment cases, be aware of your 30-day time frame so that you don't run into it later on, that you're just requesting things on day 20 and it's supposed to arrive on day 30, and now you have even more questions when it gets to you and you're not sure how to work the case. Okay. So those are all things that will really help. I know it's not always up to you on this 30-day time frame, but try to look for it as much as possible. If you know somebody is coming in that has a self-employment business or runs their own business, you may want to try to fit them in their schedule ahead of time so that you have more days to work with. Okay. So the next thing we'll talk about are just self-employment structures. So there's three primary ones, and then one we're just going to completely ignore. So the three primary ones we're going to look at are sole proprietorships, partnerships, independent contractors, and then we'll look at corporations as well. So sharecropper is going to be the one that we just ignore. So first of all, a sole proprietorship is what we think of most of the time when we think of a business. It's a self-employed business that's not incorporated, just one owner, and the income and liabilities are all the responsibility of a single owner. Okay, a partnership is very similar to a sole proprietorship, other than there are two or more people involved with the business. Okay. Independent contractor is an individual who pays their own employment taxes, doesn't have a typical employer-employee relationship, but they could work for one person or one company itself. So So when I talk about this, I'm going to talk about one example, and I'm just going to use a lawn mowing business as an example. So my lawn's growing like crazy, so I'm getting a lot of practice mowing my lawn this year. And I know Lisa was talking about this too. So if I decided I was going to start my own lawn mowing business, what would I need in order to start?
Probably a lawnmower
Yeah, probably a lawnmower.
and some gas.
Probably need some gas for my lawnmower, unless it's like one of those 1920s push ones, right? Okay.
A weed eater?
Okay, I might need a weed eater. Yeah, if I'm going to be a good lawnmower, I got to get the edges. What about like a
Something to haul it in.
Fertilizer?
What if you don't have a truck?
yeah? I might need something like that, but I could probably get by without it and just haul my lawnmower around, right? Or I could get one of those riding ones and just drive it slowly down Main Street. That'd be cool.
Holding up traffic.
Yeah. So, but do I need to like have a business license or anything like that?
Gas, lawnmower.
Not really. I have a 10-year-old who cuts my grass.
It's a pretty chill job.
Yeah. I don't even need a business license. I can just say, guess what? I'm a lawnmower, right? And then I can go to my neighbors and say, I'll mow your lawn for $50 a shot. So, so that's a sole proprietorship. If it was going to be a partnership, I could do the exact same thing, except Lisa and I are decided we're going to go into business together. She's going to mow lawns in Cheyenne. I'm going to mow lawns in Afton, and we're gonna start a business together. And whatever happens. So that's a partnership. What about an independent contractor? Can you guys think of jobs or places where you might see a lot of independent contractors?
A flooring company. Yeah. Or
what?
drywallers do it.
Drywallers, what did you say?
Like the people who lay floors? I don't know.
Oh, yeah, flooring.
Yeah, that's what they're called. Floorers. What else?
Roofers? Like people who-
Roofers can be independent.
yeah. Carpenters is what I was going to
We'll
say.
generalize right there and just say in the construction business there can be a lot of independent contractors. Okay. And it's also good to know that there's a big difference between a floorer and a florist, right?
Yeah.
That's my pun for the day.
What about a mechanic?
Okay. How would you know whether they were an independent contractor or not? You have a mechanic that works for a local shop.
Right. Well, I mean, like, you can either be a self-owned person that owns your own mechanic shop or anything like
and
that.
we're going to say that's a sole proprietorship.
Right.
How about a beautician that has to rent a booth? Would
Yep,
that-
that's perfect.
That's an independent contractor?
Yep.
Okay,
Beautician,
so-
a lot of times. And your mechanic example is perfect too. So if I own the shop, it's a sole proprietorship. If I'm a mechanic that works in the shop, I can either be an employee or an independent contractor as well, right?
Okay.
It's all how I'm paid.
Because I know they talked about it when we first started about a tattoo artist, and you can be an independent contractor that way too because you pay rent for your tattoo booth.
Yep, exactly. And
Gotcha.
the easiest way to tell is if taxes are taken out of their check or not.
Okay.
So if you have your mechanic or your tattoo artist, and they get a check every 2 weeks from the same company, if you look and there's no taxes taken out, they're an independent contractor.
Okay.
Okay, so good examples. All right, so we're going to go one step further. So I've started my lawn mowing business, and I keep clicking on the wrong thing. So I've started my lawn mowing business, and it's a sole proprietorship, just like we talked about here. And we live in a pretty ritzy part of the state, really close, and that's Jackson Hole. So have you guys been to Jackson? You guys have been passed through there. Some of you, yes. Some of you, no.
I haven't. No.
Okay, so there's some pretty nice homes up in there. In fact, like Harrison Ford has a really nice house up there, and quite a few movie stars, that sort of thing. So if I decided to start my lawn mowing business, those are the lawns I want to mow, right? So those are expensive houses. I want to mow those lawns. And if Harrison Ford hires me to mow his lawn, and I'm buzzing around with my lawnmower and I shoot a rock through his window, and it ends up costing $10,000 to replace the window, who's responsible for that?
You are.
I am, right? So I have to pay for his window. So if I don't have a lot of money, I'm going to have to sell my lawnmower probably, and my weed eater, and my trailer. But what about like my personal car that has nothing to do with my business? Could I maybe have to sell that to pay off that $10,000 debt?
Yes.
I would, right? Because I'm a sole proprietorship. There's nothing to protect me. So what people do in order to protect themselves is they start a limited liability corporation or an S corporation. So those are the next ones that we'll talk about. So with those, what that does is just offer for some protection for me, so that if I shoot that rock through the window, my business might go under, but Harrison Ford can't come back on me and make me sell my car in order to pay for his window, right? That separates the business and the individual. So LLCs and S corps, most people consider themselves self-employed, but they have started their own business. The income these individuals receive, though, is not considered self-employment income. So this is very important. If you take nothing away from today, well, and I hope you take something away from today, but if nothing else, take away from the fact that if they have a sole proprietorship or they're an independent contractor, it's self-employment income. But if they have an LLC or an S corp, they are considered employees of the business. So if I went and registered my little lawn mowing company with the state and made it an LLC, and it's Kelly's Lawn Care Emporium or whatever we decide to call it, then I would be an employee of that business. Even though I'm the only owner and operator, I'm still an employee of my own business. Okay, and that's how we look at it. So any wages received by an individual from the corporation are countable as earned income, just like they would if they worked for anybody else. Okay. Also, money transferred out of businesses or the business account into a personal account is also considered earned income. So if I don't pay myself a set wage, but I just pull that money out of that business account to pay for my house bill and my car bill and my phone bill, all those things that aren't business related, that's also considered earned income. And this can get a little bit sticky, and it's where a good interview will go a long way to find out what money is taken out. Okay. So does that make sense, the difference between corporations or S corps and LLCs and just a sole proprietorship or normal self-employment income? Okay, good. All right, so there are times when worlds collide. All right. But we'll talk about that. When we look at this and we want to determine what type of business it is, we're still going to ask good questions during the interview. We're going to examine your tax returns and bank statements and other evidence for good indicators. So, for example, if you have somebody that brings in a tax return and the tax return has their name or the name of their company and LLC, there's a pretty good chance they have an LLC, right? So that's a really good indicator of that. They may bring in a bank statement that shows an LLC name or something similar. So those are things that can help you determine what type it is. And there also is a website that's the Wyoming Secretary of State website. I've got a link here for you if you go into this presentation, or you can look up Wyoming Secretary of State. And if you go into that, you can type in the business name that you're looking at, and it'll tell you whether or not they're registered as an LLC. Okay, so hopefully you won't run into that too much, but when you do, just remember these tools are out there. There are times, again, when worlds collide. So if you have a case where a client operates as an LLC but files taxes as a sole proprietorship, you want to treat the case as you would a sole proprietorship. So that has been a change in the tax code the last couple of years that have allowed people to do that. And it's really screwed things up because when they changed the tax code, they obviously didn't look at the SNAP policy to update the SNAP policy, so those two things conflict just a little bit. All right. So any questions on LLCs, S corps, or sole proprietorships? You don't have to be an expert. You don't have to be a business expert to know those, as long as you kind of have a general idea.
Oh, okay.
Go ahead. Did you guys have a question?
Okay, so I worked for an LLC many moons ago, and he wasn't making enough money to get a paycheck, and it was owned by him and his wife. In that case, would they qualify, or whatever? Would they be self-employed if they're not receiving a paycheck?
They absolutely could, but we would also have to look how they're paying their bills, right? So they might not get a paycheck, but they might not. What was that?
I said he wasn't.
He just wasn't paying.
Just
No, I was the bookkeeper.
yeah. So in that case, they absolutely could be eligible, right?
Okay.
Yeah. And the other thing is, if they're not pulling money out of that account, and they're not paying themselves a paycheck, they could be eligible, even if there is over the income limit in that business account, because we look at it as a completely separate entity, so to speak. So, but if they were living in a, so we had a client, I'll give you this example, and you can go, have you guys worked with Heather at all? Yeah. So Heather had like the worst self-employment case of the year so far. So if you want to ever ask her about an exciting self-employment case, you can go talk to Heather. But she had a client that was making very, very good money, but they weren't paying themselves. But in that business, they were buying things like dirt bikes and snowmobiles and a very nice home and using their business to buy all these nice things, but then coming in and applying for SNAP benefits, right? So as soon as we see that those are personal items and not business items, we count that as income towards the client. Does that make sense? So they can't just hide it in the business. That's the idea. All right. So really good. All right. So once we identify that type, the one other thing that we want to look for is any type of rental property that somebody might have. So if they have a rental property, we treat it as self-employment income only if they are working at least 20 or more hours a week on that rental property. So if I just have a house that I rent out and I never go and look at it, it's considered unearned income. But if I'm working on that house 20 hours a week or more, doing landscaping, painting, whatever it is that I'm doing, then I can count it as self-employment income. Okay. So let's talk about the verifications that you need. So we're going to talk first of all about tax returns. So tax returns are always preferred when you're representing a full year of reflective income. Okay. So if I ask for somebody's 2014 tax returns, but they started their business in August of 2014, why is it not going to be reflective? What do you guys think?
Can you repeat what you said again?
You were kind of cutting out anyway.
No problem. So if I started my business in August of 2014, why is my 2014 tax returns not going to be reflective of my income?
Because it was just starting, and it's only part of the year.
Perfect. So it's only representing August to December, right? So when I look at that, I want to make sure that it's going to represent a full year of reflective income. So you'll want to have, if you request tax returns, they need to be in business for the full year of the tax return you're requesting. Okay. When we talk about that, the next thing that we'll look at is ledgers or books. So if they don't have a tax return available, or they're just starting their business, or there's been a big change, we can ask for ledgers or books. And if we don't have those, the last thing that we can accept is client statement. All right, so we'll talk about each one of those briefly. But first of all, we'll talk about tax returns. We want to use the most current tax return available, as long as the client was in business for the full year, and they state that that tax return is reflective. Okay? It is very important that if it's not reflective, there needs to be a reason why. So they can't just say, you know what, I made $80,000 last year, but that's not happening this year. And you say, well, why isn't it happening? And they say, I don't know, it's just probably not going to happen. It's not a good enough reason not to use the tax return. What we want to look for is something with significant change, all right? And we'll talk about that in just a minute. Okay, so before we talk about kind of the significant change part, I've got a little example of a tax return. So when we look at this, we're going to just show you a couple of things on what type of business structure the tax return is, what the gross income is, and what type of deductions we can use and where that's found. Okay, so most of the time when you get a tax return, and I realize this is kind of small on your screen, but it's going to be this 1040 form, right? You guys all do taxes. We're all excited. We have to do this every year. We all have to fill out this 1040 form, and this is the basic information we're looking for. So right here, the first thing you're always going to want to look at is the income portion of it. Okay, if they have wages, salaries, and tips, or that sort of thing right here, and they tell you that they're self-employed, what does that tell you right away about their business? If they're paying themselves a wage, and it goes into this line 7. Remember that you're muted. I can see lips moving. I don't know if you're discussing it amongst yourselves or not.
Like that they have an LLC.
No. That they're the sole proprietor?
Okay, so kudos to Lisa, because remember that if they're paying themselves a wage and they state they're self-employed, then it is probably because they have an LLC. Okay, if it's listed under this business income or loss, then it's probably a sole proprietorship, or it's going to be an independent contractor, or even an S corp can show up this way. So just be aware of that. Okay, so that's the first thing you're going to look at. The next thing, we're going to say this is just a regular self-employed. He's got a sole proprietorship. When you look at that, you can't just take the number that's there and use that as their annual income. We also have to look at the Schedule C, which is going to break all that down for you. So after you get through the 1040 form for self-employed individuals, there should be a Schedule C that says profit or loss from business. Okay, and here you can see that they actually made $86,000 and some change in 2014, or this is actually 2013. So in 2013, they made 86 and some change. They had a cost of goods sold of $52,000. And do you guys know what cost of goods sold is? Okay, so let's use an example. I had a really good example that came up in one of the trainings that I did of a hamburger stand. If I bought a hamburger stand, what would the cost of goods sold, or what am I selling to people that I would have to buy myself for a hamburger stand?
Like meat and buns? And
Yep, meat, buns, ketchup, mustard, onions.
So it's like the business expenses?
It is the business expenses. It's what I have to pay in order to sell whatever my product is. Okay, so if I was an artist, I would have to buy paint supplies, right? I'd have to buy frames for the art. Whatever I had to do, that's going to be the cost of goods sold. So we will ignore that, and we're only going to look at the gross profit right here. And then they start taking out deductions. So we'll talk about each of these deductions, but what you need to do is go through all of these deductions on a tax return to determine whether they're allowable deductions for SNAP or not. Okay? So, for example, on this one, I will tell you that we cannot allow depreciation as a SNAP expense. So what I would have to do is add this 1,074 back into the 34,053 to come up, or sorry, I would have to add that back into the 17,622 to come up with their annual income, because that's not allowable SNAP expense. And you'd have to do this for each one of these categories to go through it and say, is that an allowable SNAP expense, and determine that, and then if it's not, add it back in to their total income or their tentative profit. Okay. And we'll talk about those. You might get a few other schedules in there. There's some other relevant tax return forms. If you get any of these, if you don't know how to read them, just get with me or get with your supervisor or somebody else that can help you read those as you go. But the ones we see the most often are the 1040 form, the Schedule C, and the Schedule SE. So those are the ones we see the most often. Okay. So again, we want to use this tax return unless there's going to be significant change, and in most cases there hasn't been. If a business has been operating for the entire previous year, we need to have something that points to a significant change not to use it. So for example, significant change that the feds like to use as a farmer that switches the type of crop, or another one might be a small business owner that just relocated to a new city, right? Can you guys think of any other examples of things that might happen to a business that would cause a significant change in the amount of money they might receive?
Would it be like if they had a contract with somebody and they lost it?
That's a really good example, yes.
Um,
Another one that I hear a lot is people that work with their spouse and then they're separated, so half of their business left. Right?
yeah, that would make sense.
Something like that. So just find some figure somewhere that shows there's a significant change, and then put that in your narrative as why you didn't use a tax return if you are going to use one of the other ones. So if it's not a tax return, the next thing that we're going to look at is a business ledger. Okay, it also needs to be reflective of income, should include amounts and dates, should be checked for consistency, and needs to be legible. So if you can't read it, if you can't understand it, then you need them to provide something that you can understand. So it'd be nice if everybody used like QuickBooks. And Ashley, you talked about being a bookkeeper. Did you guys have like a program that you used or something like that?
Yeah, we used QuickBooks.
Okay, QuickBooks is awesome because it's really easy to read. What's harder to read are big yellow books, right? When people just scratch things out and they try to get you to understand them. Or even worse is no books. When you ask for a ledger and they just bring you in piles of receipts like they would to their accountant.
A shoebox.
Yeah, exactly. They bring in their shoebox. Okay, those aren't things that we can accept as verification. So if they do that, just let them know that they have to bring in something. Hopefully you've already established in the interview that they have a legible, this is hard to say, legible ledger that you can use. Something that's easy to read that you can understand. So check for those sorts of things. So for example, this was an actual business ledger. Can you guys see that okay on your screen? Okay, this is an actual business ledger that came into our office earlier this year. And I'm going to ask you guys just to kind of look at it and see if there's any questions that pop up when you look at it. So first of all, this was for a painting business. They brought this in as a ledger. What do you guys think of right away when you see this if you asked for a ledger and this came into your office? So Ashley, I'm going to ask you, since you're the bookkeeper, or were the bookkeeper, does this look like a good ledger to you?
No.
Why not?
Because it looks like somebody just typed it up on their computer.
Yeah.
It doesn't look like actual numbers.
You got it. It looks like somebody just barely typed it up. It's not something that they've used to track business expenses, right?
Right.
Okay. And so that's what we're looking at, is just things like that that could show that we want to see a legitimate ledger. If you look at this, it shows the income, and then it shows payroll deduction, which is fine. And then it just says IRS. You don't know what that IRS is, and you don't know what the Department of Workforce Service is. But also it says income, and then it deducts all these things. So that doesn't make sense for one thing. Then it also lists some expenses on here separately. So the bottom line is they made $33,000. They want you as the SNAP worker to only count $6,000 of that. But unless they actually show you a ledger showing that, we can't just accept this. So those are good things that kind of point out red flags and questions. So if we got that, now we know they don't have a tax return. The ledger isn't something that we can use, so we're going to take client statement. And I know this is hard, but they need to have a written client statement that states their anticipated annualized income. Okay, so on this it should include the client's name and address, number of anticipated hours worked, and a date and signature. Okay, so if all of that relevant information is already written on the application, don't request something separate. But for the most part, you can just request a client statement. Okay, use this as a very, very last resort. Okay, we always want to get evidence of income before we take client statement, but we can take client statement if it's basically the last resort that we can take. Okay, so just keep that in mind. So I won't talk too much about that. Here's a sample of a self-employment verification form that you could give to somebody, which includes all that: name of business, brief explanation, talks about their income. That's something that they could fill out that you could use to determine their income. So the next things we'll talk about is whether you should average or annualize income. So you should annualize income when it is received over a short period of time, but it's meant to support the assistance unit for an entire year. Okay, so I'm going to use my example again of my lawn mowing business. Okay, how many months of the year do I have to mow lawns in Wyoming?
About 3 weeks.
About 3 weeks. That's about right, because it's about that time it's burned, right? And then it snows again on it. Yeah.
Yeah.
So it's a pretty short season, but let's say I am the best lawnmower there is, and I make $80,000 in the summer mowing lawns, okay? And I don't have to work at all in the winter. Is it fair for me then to come in September and say, you know what, my income is now 0, I am eligible for food stamps? What do you guys think?
No.
No, that doesn't make sense, right? So if I make the money over a short period of time, even if it's just the summer months, but it's designed to support me and my assistance unit for the entire year, then I'm going to annualize that, which means I'm going to take that $80,000, I'm going to divide it by 12, and I'm going to use that for the monthly income. Okay? I grew up in a household where our income would have been annualized. My dad was a hunting outfitter. He made all his money in the fall, taking people out hunting, and so we would obviously annualize our income. Okay? So the next one that we'll look at is average income. So average income means it's only intended to meet the needs of the assistance unit for a portion of the year and is indicative of the future. So my lawn mowing business, now I'm only making $500 a month mowing lawns. Is that going to support me and my household for the entire year? No. So what am I going to probably have to do in the wintertime? Find a different job, right? Yep, exactly. So I'm going to have to do something else. So if that was the case, I wouldn't take that income and divide it by 12. I would take that income and divide it over the period it was designed to cover. So if I had 3 months worth of lawn mowing business and then in the winter I did something else, I would just divide that by 3 because that was my current income. Okay. So what other examples? So I used a hunting outfitter and the lawnmower. What other examples can you think of businesses that would probably need their income annualized? This is a good hint right here.
Shoveling snow.
Yep, shoveling snow, wintertime snow. Mm-hmm.
Contractors, carpenters, people that need good weather because they're outside, like roofers and stuff.
There you go, like the roofer or the framer that's got to be outside that only does most of their business in the summer.
Road construction.
Oh yeah.
Road construction.
Actually, that's an independent contractor right there. Is like people that do the street signs or whatever, the orange cones and stuff.
Yep.
That would be it.
That's true.
Oh, I forgot about that.
Use my brain.
All right. So, what about examples of average income? We talked about snow removal or like seasonal stuff. Can you guys think of any other examples?
Of average income. Which one was average again? That's the one where
you make it
have to,
right?
Yeah, it's just designed to cover a short period of time, or if there's been a really significant change in the business. So look at seasonal jobs, right? We talked about seasonal jobs, but that you would have to have another job after that. So lawn mowing was a good one. You might think of other examples, but
Snow removal.
snow removal. Yeah, Homer started a snow removal business. That's why I have him on here.
So did Barney.
Or like my grandma's a fire watcher, and she only does that during fire season.
Yep, and then does she have another job in the wintertime?
No, like that's it. She just is in the summer and makes enough that she can live off of for the rest of the year.
So would you annualize that, or would you average?
Oh crap, that's annualized, huh?
Yep, you
but
got
before,
it.
when she did have another job, then I would
Exactly.
average it.
If she had another job, if that was how it worked, then you might average it. So that's what you want to do. All right. Good job. All right. So we're almost out of time, so we're going to buzz through deductions really quick. There are certain deductions that we can take, but there's 2 basic options that we can give people. One is to use their actual business expenses as a deduction. And that's when they have more than 25% of their business income is deductions, or we can also give them a flat 25% deduction. So if somebody can prove to you that they just have one legitimate business expense, then they have to just prove that one expense, and then you can take 25% of their income as a deduction. All right, so just remember, we want to take whichever of these is greater. So most of the time we're looking for those actual business expenses, but once in a while we may just give this flat 25% deduction. All right. So some of the allowable deductions that we can look for: rent and utilities, if that's on a business property, storage and warehousing costs, upkeep costs, wages and salaries that people pay their employees, feed or stock, or plants, fertilizer, that sort of thing, transportation costs that are required to perform the service, and we'll go back to this, taxes, insurance premiums, rental payments, costs of goods sold, we talked about that, and then there's just a long list of things we can allow. There are certain things that you need to look at that we can never allow. So expenses and losses from previous periods. This is an accounting trick that people say, you know what, I've lost so much money this year that I'm going to carry that over into future years. That's not something that we can use. So you might see that tax trick on some tax returns, but it's not something that we can allow. If somebody spends SNAP benefits as part of a business expense, we can't allow that deduction. So if I was going to make tamales and I used my SNAP benefits to go buy all the ingredients for the tamales, I could not use that as an expense. Okay, and it's also illegal. I can't do that with SNAP benefits. But aside from that, I also can't claim that as a business expense. My regular federal, state, and local income taxes. So somebody has to pay taxes at the end of the year. That can't be a deduction. Retirement money. Other work-related expenses such as transportation to and from work. We all have to drive to work. So just because a contractor has to drive to different jobs every day, we can't allow that transportation expense. Repayment on the principal of a bank loan or depreciation. Those are all things we cannot allow. So just kind of keep those in the back of your mind when you look at that. That's also in the combined manual. And the last one on here is penalties and fines. I have a really cool example. I had a client in Jackson that was a taxi driver, and he brought in all of his parking tickets to use as a deduction because he stated he always had to park illegally to get the best fares, and that was just part of his regular business expense. So we could not allow that because that's penalties and fines. All right, and then charitable contributions or tithing, that sort of thing, we can't allow that as well. That might be allowed on their tax returns, but that's not something we can allow. So just a note on transportation costs. Just remember that any deduction given for transportation costs must be required for the business to perform its function. So a good example of this is a taxi driver can deduct transportation costs because it's part of their business to drive people from place to place. But a housekeeper that drives from house to house could not because they're just basically traveling to and from work. Okay, does that make sense? Okay, good.
What if the housekeeper was carrying cleaning supplies?
Still, they would just be driving from job to job.
Okay.
But like a delivery driver, if I was delivering stuff from houses, then I could do that. If that was my primary business, was a delivery driver. Okay. So just remember, a tax deduction does not always mean it's a SNAP or power deduction. So everybody, you may have people that want to argue this, that say, well, my tax accountant says that I can deduct depreciation. That's fine, but you can't do that when it comes to applying for SNAP benefits or power benefits. So just remember that. Okay, and then always make sure you have a good narrative. Make sure you explain in your narrative what verifications were requested and why, what information was given in the interview, and any additional information pertaining to the eligibility of your self-employed client. So, all right. Finally, the notices, we talked about this. When requesting verification of self-employment expenses, keep your notice as simple as possible. Make sure to establish what is needed during the interview so that in your notice you can just say, I need verification of self-employment income or verification of self-employment expenses, because you've already talked about that in the interview. And that'll make it really simple to send out notices as well. Okay, so quick recap. we talked about interviewing. We talked about the self-employment structures. So remember to look for LLCs or S corps, and to see if it's a sole proprietorship, to see if we need to treat that as earned income, like regular wages or self-employment income. And we talked about what we need for verification, and most of the time that's a tax return. Talked about the annualizing versus averaging, and then just a brief intro on deductions and notices. So, do you guys have any questions or comments or concerns? All right, perfect. So we'll finish up right there. No assignment really for this one, other than I am going to test this out, and then I will get back with you, and we'll go as scheduled tomorrow. So, okay. All right. Thanks, you guys.
Thank you.